Welcome back. Well, moved into the green now for the Nifty. The mid-cap index is showing a gain of around 0.2%. We have the Bank Nifty, which is in fact speeding ahead. So the Bank Nifty, which is currently up around 0.5% at this point in time. Axis Bank is also up around 1.5%. This is after Nimesh's exclusive, also probably helping in terms of sentiment for that one. State Bank of India, which is up around 1% at this point. So a couple of HDFC twins not doing too badly. HDFC up around 0.8%, not a part of the Bank Nifty, but nonetheless that stock stands out. But let's get talking about a couple of auto stocks. Most of the auto stocks for the month of December have disappointed, but one company has stood out. It was Escorts. In fact, they've grown around 21% in terms of domestic tractor sales. What led to this sort of strong growth and what can we expect going ahead? We have Mr. Bharat Madan, the Group CFO of Escorts, who's joining in to talk to us then. Mr. Madan, thanks very much for joining in and wishing you a happy 2019. What led to this 21% growth in your domestic tractor sales at a time where all of your peers have not done well at all?
I think one of the reasons is the stronger markets in which the company is operating in. I think they have done pretty well. So even if you look at December month standalone, our markets the strong markets have grown by about 16% compared to the other weaker and opportunity market in the South and Western India, where actually there's been a degrowth of about 7%. So that's one factor which definitely is played in our favor. And we expect the momentum of this sort will continue for next at least 5-6 months. That is typically the season for our stronger market now for the Rabi market. So that should also help in growing the numbers further.
So what might your guidance be for the second half in terms of tractor sales growth for the domestic market?
See, overall, so far the industry has grown by about 13% this year for 9 months, first 9 months of this year now. So next year, quarter Q4, in any case, the base numbers are very high. Now with the last year, we've seen 49% growth happening in the tractor industry numbers. So this year, we don't expect it to be a very significant growth, what we have seen early in the past few months. So, but still, we're expecting it to be anywhere between 0 to 5%, 5-6% sort of growth, single digit can happen. So, overall, for full year, we expect the industry will still do somewhere between 10 to 12% sort of growth on a full year basis for FY19.
Okay,
so we expect the same momentum may continue for Q1 also for next year. So, Q1 can again see good growth numbers of maybe 10 to 15% range.
So, 10 to 12% total growth for FY19. Is that correct for the domestic market?
Yeah, for the industry.
And for you?
So, for us, our growth has been obviously much beyond the industry numbers. So, our growth so far in the first 9 months has been close to 25% compared to 13% growth in the industry. So we expect probably the momentum should continue to next quarter also. So I think overall for the full year basis, we're looking at 20% plus growth for the company in the volumes.
20% plus volume growth for overall, right? I mean, domestic export, everything combined for the full year, FY19.
Yeah. Exports will be higher because
exports has been higher, yes.
So so it'll be almost 40-50% growth in exports.
Correct. The numbers though the units are smaller, of course. Just a quick word. Mahindra and Mahindra also reported numbers, and they actually reported a dip. Could you talk to us a little bit about what perhaps could explain this difference? Because both of you are catering to the same market at the end of the day.
Well, I think one of the reasons could be, I really can't comment upon what the competition has done really, but I think one of the reasons, like you mentioned in the beginning of my discussion, was that our stronger markets, especially the northern central India, where we are very strong players. So the markets like Punjab, other than Punjab, you UP, Haryana, Rajasthan, MP, Bihar. So these markets have done pretty well. So we've grown 16% industry in these markets compared to the market of the southern India and western India, where we've seen a lot of stresses still there in the farmer side, which are actually degrown in December. So that could be one factor, but obviously beyond that, it's very difficult for me to comment. But from our perspective, I think we got today one of the lowest level of stocks in the industry now. I think it's sitting at about 3 weeks inventory in the channel, which is the lowest level I think we've seen in the last many years.
Okay. So in the stronger, in what you describe as your strong markets, I mean, are you way and ahead in terms of share of the market as compared to say a Mahindra? Or are they also a
Mahindra obviously
significant
is
player?
a leader, so
Yeah.
Mahindra is a significant player, but they got two brands, and both brands put together they got 40% plus share in most of the market. So obviously we can't really beat them standalone. But I think our overall stronger market share is close to 15-16% range, and in the weaker market, especially in the south and west, we are pretty weak. Where we are 5-6% sort of market share player. So that's why for us it makes a lot of difference if there's a regional growth disparity, and the stronger market grows, then definitely it helps us in overall volume.
Okay. Mr. Madan, what's your sense in terms of growth for the second half if in case there are agri SOPs that come through from the government? We've already seen farm loan waivers, but nonetheless, if there are more SOPs?
So as I mentioned, I think the Q4 probably will still be a softer quarter maybe because we already have a very high base of industry now, so of last year. So still it can be a low single digit growth. But Q1 of next year still can again pre-election quarter can see very good growth rate. So it can be anywhere between 10 to 15% growth Delhi will continue. Beyond that, it's difficult to estimate because looking at the monsoon prediction, how it really goes and then the election scenario. So I think we have to wait and watch for that.
Okay. The other segment which has done well for you is obviously your exports. I mean, it's around 197% growth. I know it's a small base, but nonetheless, I think you're entering into new markets as well. What's the plan there? And if you could just give us a sense in terms of the trend we could expect.
So for exports, we had given a guidance of about 50% growth over last year. So I think so far we are more or less in line with the target what we had for this year. So expect overall for full year will do about 3,000 odd tractors in exports. So that's something which is bound to happen. And obviously in the geographies, we are now obviously spreading out. So got a good distribution network across 60-70 countries now globally. And most of the market like Southeast Asia and Africa, which are the bigger ones. And then Latin America, European countries, we got a one subsidiary operation in the Eastern European part. So these countries have picked up some volume. So the numbers are going up in this side.
Without being specific or anything, but could you talk to us a little bit about what margins may look like? In I think the third quarter, tractor margins improved about 50 basis points quarter on quarter. How are we set up so far? What have we seen so far?
So this quarter, like say, compared to the last year, probably the margin may not be in the same line because one, obviously the issue was on the inflation side, the commodity prices. The price increase which was happened was after the main season was over, which we did somewhere in November. So which is I think one of the impact which will be visible this time. So now we're seeing the commodity price softening slightly. So maybe the pressure will ease out a bit really going forward. But I think Q3 will definitely see that sort of pressure on the margin side. But overall, since the volume growth has been good, so I think overall absolute number-wise, we expect the margin should be very good, strong. Then as a percentage terms, maybe slightly lower than last year.
So in Q3, volumes may pick up, but volumes should be pretty healthy. Margins may be a little under pressure, but Q4 it should be better. So far, what you're saying is what you're saying. Okay.
Okay. Just a quick outlook on your construction business. What exactly is the ground reality at this point? You've done well in your Q2. Revenue was up 50%. It offset some of the concerns. But as of now, what kind of growth trend are you looking at?
So in between, there are some issues concerned on the construction equipment side because the NBFC related issues. So financing costs had a bit of a problem, especially in the month of November and partly also passing through the month of December. But still, I think the industry has done well. I mean, we have also gone significantly higher, about 30% growth even in Q3. And overall, for full year, YTD, we have grown about 38% on construction business. So our guidance for this full year is it will be 30% plus growth in the equipment side. And we have good, strong demand now coming up. So these are the season months for the industry. So I think Jan to March is the strongest quarter. So we expect very good growth rate to happen in this segment also.
Okay, Mr. Madan, thanks very much. Appreciate you joining in, and thank you for patiently answering all of our questions. So that's Escorts at this point. Ashwini is waiting by. I'm being told it's time to take stock of the market with him at